There's one question I get more than any other. So, where's the bottom? Should I sell now? I used to mumble something vague, because honestly, nobody knows. But the book I've been covering, The Investing Mind, by a Seoul-based fund manager, goes one step further. The problem isn't that the question has no answer. The question itself is broken. Last episode, we covered the losing on purpose test and why your brain rewards you for fooling yourself. This episode is the practical half: how to write notes that build real skill, how to fix 3 useless questions, and how to structure bets you can survive. First, the note-taking rule that builds skill: falsifiability. We ended last time on a cliffhanger. Why does writing "this stock will double" teach you nothing? The author borrows the answer from Philosophy of Science. A statement only counts as scientific if you can check whether it's wrong. That's falsifiability. It'll double can't fail in any useful way. If it works, you don't know why. If it fails, you don't know what broke. Instead, chain your reasoning. 1. This company's new business will show up in next quarter's earnings. 2. Earnings are 2 months out, and investors will catch on within a month. 3. Therefore, the price can reach this level. Now, even a losing trade tells you exactly which link snapped. That's raw material for your next decision. 2 practical add-ons. First, make decisions the night before. If you traded because of something you saw during market hours, odds are you weren't deciding. You were reacting to noise. Second, forget your entry price. Tomorrow's price movement doesn't know what you paid. The author's checkpoint question is brilliant. If this money were all cash today, how much of this stock would I buy right now? If that answer doesn't match your actual position, it's time to adjust the position. Second, 3 useless questions. Rebuilt. Where's the bottom? Before that question means anything, you have to define which game you're playing. A 10-year investor and a 1-month trader should react to the same chart completely differently. So the question becomes, at this price, if I hold for 3 years, what's my expected annual return? And how far could it rise or fall while I hold it? What's the market going to do? The author's exercise. Force yourself to answer both ways: why it could rise and why it could fall. If only one side comes to mind, you're not reading the market. You're reading your own bias. And here's my favorite line in the book. Stocks don't go up because the market is good. The market is good because individual stocks went up. If you have conviction in the business, stop obsessing over the index. He also quotes Andrei Kostolany, the legendary European speculator, huge in Korea and Germany. A trend is money plus psychology. The economy can look fine, but if liquidity dries up, the bear market comes anyway. When should I sell? The author compresses it into a single question. Is the idea used up? If the reason you bought no longer exists, sell, whether you're up or down. And if the idea is still alive, yesterday's dip is not a reason to bail. Third, think in probabilities. Bet like a barbell. Even a game with great odds can lose several rounds in a row, so the real objective is staying in the game, keeping the number of trials high. Flip that around, and you get a hard rule. If the worst case would knock you out of the game permanently, don't take the bet. Ever. This is where convexity comes in. A stock is a convex bet. Your loss stops at your capital, but the upside is open-ended. In convex systems, splitting your bets between the very safe and the very aggressive beats sitting in the mushy middle. That's the barbell strategy. The thing to fear is the opposite shape. Assets that look safe, pay quietly for years, and then take everything in one event. That's where black swans hide. My honest verdict: everything in this book is right, and most of it is hard to do. Journaling is easy on calm days. On the day your account is bleeding, the pen gets heavy. So I'm keeping just one habit. If this were all cash today, would I buy this stock? That single question has done more to free me from anchoring on my entry price than anything else I've tried. In a market this volatile, this book is a reset button for the mind. This video isn't a word-for-word retelling of the book either. It blends my own trading experience with the author's framework. If you want to build your own falsifiable questions, the book is worth reading directly. This is not investment advice. This video is for review and commentary purposes only. The next video is coming. See you then.